Ladies and gentlemen, good day and welcome to the Huhtamaki India Limited earnings conference call for Q1 2023, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Hitesh Tong from ICICI Securities. Thank you, and over to you, sir.
Thanks, Jico, and good afternoon, everyone. On behalf of ICICI Securities, we welcome you all to the Q1 CY23 earnings conference call of Huhtamaki India. Today from the management, we have Mr. Dhananjay Salunkhe, the Managing Director, and Mr. Jagdish Agrawal, Executive Director and Chief Financial Officer. I would now like to hand over the call to the management for their opening remarks, after which we can open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Hitesh. So good afternoon, everyone, for attending the call. I am Dhananjay Salunkhe, Managing Director of Huhtamaki India, attending this call along with our CFO and Executive Director Jagdish Agrawal. Let me start the presentation by drawing your attention on our safe harbor statement included in the presentation for good order's sake. So, a quick around the Huhtamaki India's background. So, Huhtamaki India is a leading provider of primary packaging and decorative label solutions in India. We are part of Huhtamaki OIJ, a global leader in sustainable packaging solutions over 100 years of legacy and Nordic heritage. We have been consistently growing since 1935. So Huhtamaki India has been packing memorable experiences together with our customers and partners. Today we are an integrated flexible packaging solutions company with a pan-India presence backed by around 15 manufacturing sites, 1 R&D center and 5 offices. A bit on Huhtamaki OIJ. Huhtamaki OIJ is a global leader in sustainable packaging solutions with Nordic heritage. With innovations and transformation at core, the company is steadily pursuing 2030 ambitions of achieving carbon neutral production and making all its solutions recyclable, reusable or compostable. So coming to March quarter performance. So company faced challenging external environment with overall demand impacted by continued pressure on consumption, more predictable supply chains which are evidenced by destocking and inventory pipeline corrections by our customers, and return of demand seasonality. So overall sales declined due to lower volumes. However, company has been able to realize value for its products by increasing our relevance to the customers. So in spite of decline in sales, EBIT and EPS improved due to better portfolio and price management. And we continue to invest in our operations and technology to innovate and develop fit for purpose sustainable packaging solutions. So we are redefining the possible with game-changing sustainable packaging solutions, setting new industry standards. So under our Blue Loop brand, we have developed fully recyclable mono-material structures for flexible packaging. What is unique about these solutions is the combination of best-in-class protection in packaging, which is fully recyclable and being fully affordable globally. And these structures or these products will be replacing conventional flexible packaging with completely new structures suitable for a broad range of demanding applications in food, beverages, pharmaceutical, home and personal care, and industrial applications. And these innovations will help our customers in delivering onto their commitment of using only recyclable packaging by year 2025. Many of our key global customers have independently pledged to drive fully recyclable or recyclability and circularity of packaging. And with our innovations, we are helping address this need. Similarly, we are also making good progress on our strategic priorities, which are delivering customer excellence, developing new innovations, driving world-class operations, and embedding sustainability in everything we do, and developing a talent required to execute our strategies. During the quarter, our labeling innovations have been recognized for their outstanding quality and excellence by India Stars Award. These pressure-sensitive labels were recognized for their unique features, which are metallic and tactile finishes and security features, and also for innovative two-layer requirements, which are for tablet packaging. Similarly, our PP-based laminate for specific product categories like chocolate and transparent barrier for a snack pack won the SIS SOP Star Awards. So these awards are a testament to our focus on delivering packaging excellence to our customers in product development, innovation, creativity, and sustainability. These recognitions are also a reflection of the collaboration and collaborative efforts our teams are doing along with our partners to help brand owners in terms of personalization, sustainability, and improving accessibility in the packaging area. Now I would like to hand over to Mr. Jagdish Agarwal, our CFO and Executive Director, to walk through the financial performance.
Thank you, Dhananjay. Good afternoon, everyone. I'm feeling excited as we are starting this call after a long gap, and I'm sure it would help to strengthen our communications with our stakeholders. Now, I will walk you through our March quarter performance. Notwithstanding a challenging environment in March quarter, we have been able to maintain a steady bottom line during the quarter. This in spite of YOY decrease in the top line by 9%, which stood at 6.46 billion for the quarter. The decrease is mainly attributable to volume pressure. However, softening in inflationary pressure and improvement in operational efficiency partly helped to bridge the price versus cost gap, leading to an improvement in margins. Even though EBITDA at 576 million rupees remained flat for the quarter in terms of percentage of sales, YOY, EBIT at 420 million is higher at 6.5% of sales compared to 5.8% year over year. And this improvement is majorly driven by lower depreciation due to revision in useful life of fixed assets. Profit before tax at 352 million, slightly better on YOY basis. Working capital efficiency helped to reduce overall borrowings and in turn lower finance cost despite increasing interest cost. Net profit for the quarter at 355 million rupee has improved to 5.5% of sales, driven by one-off reversals of accrual for an uncertain tax provision on account of favorable tax ruling. EPS for the quarter at rupees 4.71 rupees is higher by 44% year-on-year basis. We have talked about the top line contractions. In fact, Dhananjay has emphasized on the top line contraction, and that's mainly because of volume. And it was due to multiple factors. And having said that, this is also one of our key priorities by targeting responsible and profitable growth business. Except top line, if you look at all other financial indicators for the March quarter, are on upward or positive trend. Be it EBIT, which is at 6.5%, PBT at 5.4%, and if you talk about profit after tax, it's around 5.5%. The company remains committed to its stakeholders, focusing on technology-enabled innovation and operational performance, and realization of value for its products by engaging constantly with our customers. We believe this will help the company remain competitive in the long run to drive responsible and profitable growth. With that update, I would hand over the call to Hitesh for Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Manan Poladia from MKP Securities. Please go ahead.
Hello, sir. Congratulations on a good set of numbers. Sir, my first question is based on the press release, the disclosure we just put out about the liquidation of the land in Thane. Is there any ballpark numbers that you could give us as to what will be realized by that liquidation?
Okay, I'll take this question. So it's very difficult at this point of time to talk about any ballpark numbers, because it's still I mean, if you look at, we had given a stock exchange disclosure on 17th of March. And,
yes.
At this point of time, we are engaging and the due diligence process is going on. So we
Okay.
won't have any number at this point of time.
Okay, understandable, sir. Also, another question, regardless of whatever the proceeds are from that sale, do you intend to utilize them to pay back the long-term borrowings that we have from the parent?
So again, I mean, it's too early to comment on that point, but definitely, once we'll get into a sort of a certainty about the transaction, we can work it out what will be the right uses of that, consideration.
Okay, I just have another nested follow-up question in that. My question is, sir, do you for the next year or 2 years or so, are there any capex plans in the offing whatsoever?
I think
or any acquisition, it could be either capex or acquiring other companies, whatever be the case.
I think capex is any business an ongoing process, and we continue to invest for sustainable based innovations, and we are doing that, and that's going on already, and it will continue to be in that capex mode. But anything talking about acquisitions and all at this point of time, at least we are not in such discussions.
Right, sir.
Speculative as well. Thank you.
Right. I'll get back in the questions.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question is from the line of Priyank Chheda from Vallum Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I have a strategic question. So we have seen flat volumes in whole of CY22, while most of your OEMs that we track have grown in terms of value and even in terms of volumes, plus they have an aggressive plans to grow further. So in this context, I mean, what are your long-term growth plans, and we as an investor community, how do we track that your growth plans are aligned with your OEMs?
Yeah. So one thing, let me share our strategic position, and we position ourselves as a solution provider to all the OEMs in terms of innovative and sustainable and differentiated product structures, which helps them, our brand owners, to introduce their product into their respective categories. So coming to your first question, which is the flat volume growth, yes, we observe that there is a very accelerated commoditization which is happening, and that is where we are creating a differentiation by introducing and by launching the new innovative products. That is where we are launching the Blue Loop, which is the differentiated monostructures, which will create a differentiation in the market. So these are the product lines which are strategically positioned to take care of the future.
Right. So Mr. Dhananjay, so you've been appointed in this company over past 4-5 months. I mean, it would be glad to hear what are your priorities in the near and long term, and Now, how are the strategic, talks going on with the parent? How do they look India as a growth opportunity, as an engine for the growth?
Yes. So a very good, follow-up question, wherein our parent definitely sees India as a very exciting market because the next new 1 billion consumers are going to be here, and our recently, in fact, coincidentally, yesterday we had, our global Huhtamaki OIJ has updated the strategic intent in terms of our 2030 ambitions and strategies, and our strategies are clearly aligned with our parent strategies. And essentially, what we are focusing on as a strategic priority is one, overall enhancing our customer experience, that is customer centricity, then driving innovation, then accelerating our world-class operations. So these are the three clear strategic priorities what we have articulated, and along with that, in order to execute those priorities, the enablers such as talent pipeline and digital are the enablers which we are driving, and these are consistent with our parent company.
Got it. So, last question. Over the years, we understand that raw material have been, have been volatile. So, how do you see your gross margins moving ahead directionally, and even in if you can share, what would be your long-term targets? Where do you see your gross margins settling down from the highs of 32, 33? We are down to 26, 27. It would be great if you can highlight on that. Thanks.
Yeah. So commenting on directly on a gross margin would be kind of speculative, but at the same time, to answer your question, yes, I mean in India is going to be remain the market which is cost competitive, and that is where we are focusing on having a right balance of our product portfolios, business portfolio, and product mix. So going forward, we definitely anticipate that the volatility what we had seen in the past in our raw material prices shall stabilize, and will kind of give us opportunity to make a long-term plan in terms of our product business portfolio. Hello? Are you there?
Yes, sir.
Yeah.
Yes, sir.
Okay.
We are moving to the next participant. The next question is from the line of Mr. Nisarg Wakaria from NV Alpha Fund Management. Please go ahead.
Yeah, good evening, gentlemen. Sir, I wanted to ask you firstly that in a growing economy, where the volume growth is at least 5-6%, this company with the best lineage and like best sort of clients has remained at a flat EBITDA for almost 6-7 years, from 2015-16 to till date. In your brief stint of 4-5 months, could you attribute the key reasons to why this company has underperformed so many other companies in India very briefly? This is my first question.
So if you see the overall market in India and the packaging companies, very difficult to pinpoint the volume growth or organic growth of any particular player. So most of the time, what we see is it's a combination of organic or inorganic growth. So coming to Huhtamaki India's proposition, why volumes have been either flat or so on. So essentially, I will go back to my first comment, wherein we position ourselves as the company who is into the innovative, sustainable, and differentiated products, wherein of late, as the time horizon what you mentioned, we have seen the rate of commoditization, increased over a period of those 5 to 6 years, and that is one. The second, the biggest opportunity in flexibles packaging in the past used to be the from the conversion from a product format from rigids to flexibles, and I think we are seeing the maturation. It is maturing over a period of time, and those two things are definitely seen as a challenge in my last 5 to 6 month tenure, and that is where we are aggressively launching the sustainable packaging solutions in terms of our Blue Loop brand, which will help us to cater to our customers' ambitions, which are introducing the recyclable packaging solutions by 2025, which most of our end customers have pledged to, and that is where we said that we are increasing our relevance. So that should help us to maintain our position of differentiation.
So this recyclable, sustainable packaging that we are planning to launch, is that also having a large enough addressable opportunity in India, or will it remain a niche business?
This would have a large addressable market. As you would have heard in my comment that the product range, what we are going to launch, is going to serve the broad range of product, right from food, personal care, home care, industrial applications. So it is definitely going to have a larger addressable market.
Thank you, sir. Sorry to interrupt. Mr. Nisar Wakaria, may we request that you return to the question queue for follow-up questions, as there are several participants waiting their turn. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question is from the line of Piyush Khandelwal from Bank of India Mutual Funds. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my question is, addition to what the previous participant asked, if I look at last, 5 years, our volume growth especially has been very patchy, and our major growth has come from the acquisition. In last 10 years, we have done a couple of acquisitions, with the majority acquisition that we did in 2015. So how should we look at that, let's say, next 2 years, 3 years down the line, about the organic volume growth, or maybe volume growth as a whole for a company? Will it be again acquisition led, or will it be an organic growth?
Yeah, so whether organic or inorganic or acquisition, I think that would be slightly speculative. At the same time, the product range what we are offering to our customers, which is in line with their 2025 ambitions, which is basically introducing recyclable structures. I think that is where we are focusing on supporting the new age structures.
So is there any target in your mind that you will be looking, let's say, a mid-single digit kind of a volume growth, which is, FMCG market grows in India. So is there any targets in your mind that you're looking that you should be hitting at least this kind of a growth?
So we will be looking at responsible growth, responsible and sustainable growth. So, okay, Jagdish, you want to come in?
Yeah. So, I just want to add a couple of points to what Dhananjay talked about. First of all, if you look at 2022, we had a 14% value growth. If we have gone through our financials of 2022, we have talked about that our top line have increased from 2,625 crores to 2,982 crores. So that's a 14% growth. Now, talking about volume, if you look at, I was looking at a report which talk about that 2022, the FMCG volume growth was into negative 0.03%, and that's a reference from one of the published report. The consumption was challenging. If you look at last year, it was driven, impacted by the high inflation and all. Having said that, now our strategic initiative where we are trying to address a key problem, water sustainability, and we are engaging with our customers, trying to solve the bigger problem. And I'm sure that long-term things probably we won't be able to see immediate impact for this, but definitely we are setting ourselves for a long-term growth and long-term profitable growth. And as a responsible solution provider, we're solving the problem of our customers at the same time driving a growth in a more long-term and sustainable manner.
All right, understood. So even if I exclude, let's say, I mean, the COVID impacted, or let's say, I mean, CY22, I mean, the volume growth has not been very sustainable, which we expect, let's say, from companies like you, like a sustainable, which are catering to the FMCG market. So that's what not has been witnessed. So I mean, just trying to understand what was the issue. Is it like the change which you said, that the change in packaging, let's say from flexible to rigid, is that kind of trend that you are witnessing? I mean, going forward, and this kind of volatility in between.
Not like that. I mean, like I said, if you talk about overall FMCG volume growth of 2022, that was a slightly negative. There were no growth in the volume for 2022 calendar year. Now, when we talk about Huhtamaki, again, we talk about that we are a differentiator. We are working on sustainable-led innovation, and definitely we are focusing on a long-term growth, working very closely with our customer. And another point to note is that there is a heightened competitive scenario in the market, which some of the applications are getting commoditized. So our focus would be to address the bigger challenge, which is like impacting the planet and environment in a sustainable packaging solution. And that is going to help us to have a long-term growth and sustainable growth. And that is our focus here right now.
Thank you. Our next question is from the line of Mr. Naushad Chaudhary from Aditya Birla Sun Life AMC. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, firstly, just wanted to understand you on the overall business margin profile. So, see, historically also we have seen in the raw material there has been the volatility, but despite that we have not looked so much on the either gross margin or EBITDA margin. But this time from last 2 years, I think we have been struggling. We understand that there has been a raw material pressures, but given the nature of our business, do you think this should not be the correction which we have seen should not be there in the margin? So has there anything else has changed in the business which used to be 2 years before versus now? Can you explain this? And if volatility remains same in the future, will we experience a similar kind of volatility in the margin as well if raw material volatility remains similar in the future?
Yeah, so first let me talk about our EBITDA margin. We have reported for the March quarter 8.9%. And if you go back and look at December quarter, we have reported 6.7%. So there is an improvement in our EBITDA margin between December quarter to our March quarter. The second thing is that what we are focusing is that we are working on a world-class operation. We are driving operational excellences through our TPM solutions and all. So we are trying to work on the things which is going to help us in a long-term sustainable competitiveness, and where we are focusing. I hope that definitely the journey which we have started will continue, and we continue to focus on the opportunities what we have on our hand. Having said that, we are focusing on both is the top line as well as the bottom line, and that's what it reflects, at least bottom line reflect into this March quarter results.
And maybe adding to Jagdish's point, you also asked us about what's the plan around managing the volatility. I think the volatility what everyone observed in the last 2 years was actually not experienced before. So I think most of us are now ready to manage such a kind of volatility going forward. So hopefully systems and processes are placed in terms of managing the But hopefully, as industry trends are indicating, raw material and such a volatility should be stabilizing going forward.
Okay, so irrespective of the volatility in the raw material prices in future, we should not see this kind of volatility in your gross margin. Is that the correct understanding?
I mean, again, see, if you talk about, there always will be impact on inflation and deflation on any financials. It's like a time lag. Normally, we do have a contract with our customers. At the same time, we do have a contract with our suppliers as well. And any time lag and the frequency of that contract terms definitely will have an impact. But yes, the kind of impact what we have been seen in 2021, sort of that was an outlier. We won't expect that kind of a severe impact, but yes, time lag impact will be there, whether it's a plus or minus.
Thank you. We move to the next question. Our next question is from the line of Deven Shah from Knifeshare Investment Advisors. Please go ahead.
Good afternoon, and all present. My question is, can you please give a brief about revenue breakup industry-wise? I mean, which sector contributed to major revenue?
Mr. Devansh, I will mute your line as there is some kind of a disturbance or static from your line. I will mute your line while the management answers the question. I will unmute it once they are done. Thank you.
So I mean, we play in all segments, whether it's a personal care, whether it's food and beverages or confectionery and all. I think pharmaceutical and all. I mean, we play in all segments where we have a play into academic sector. But yes, some of the key segments where we have a high significant share of business is a food and beverages and personal care and beauty.
Hello.
Yeah.
Hello.
Please go.
Can you provide some number? I mean, which percentage-wise number, which sector contributes major revenue?
We'll not go with the segment-wise, but yeah, if I have to put two big segments for us, definitely food and beverages and personal care are big segments.
Okay, and can you provide some insights about raw material mix?
In a packaging, there are a couple of raw materials which goes. It can be resins and foils. I think it's a combination of all these raw materials.
Sorry, you are not audible.
Is it okay now?
Yes, sir. Please go ahead.
Yeah. So the general raw materials in any flexible packaging is revolve around the resins, films, and foils.
Okay. And about operation efficiency, did your TPM policy improve your operation efficiency that you were talking about?
Yes, in TPM. So yes, we have launched total productive manufacturing in our plants, and we are seeing improvements in terms of operational efficiencies in our plants.
Thank you. May we request you to join the question queue for follow-up questions. Thank you. Our next question is from the line of Khush Gosrani from InCred Asset Management. Please go ahead.
Yeah, hi. Thank you for the opportunity. So just wanted to understand, are we looking to introduce fiber packaging as well, which has been the fastest growth segment for our parent?
So Huhtamaki India is, we are into a flexible packaging, business, whereas fiber and fiber food services is another segment, and it's independent. Yeah.
Okay. And sir, in terms of, as you had highlighted, there has been inventory destocking by our customers. So has that situation normalized now, or it is going to still take time for us? What is the commentary from the customer?
Yeah, so I think we are seeing two things parallelly. So one is of course inventory pipeline correction or destocking, and second is also seasonality. So while inventory pipeline correction, we are seeing some moderation or coming back to the stability. But this basically not only at our end customers, but at their distribution centers and so on. So that impact as well as seasonality is yet to be assessed. Like just one point in case is typically summer season. There are some product portfolios which we service is for a beverage industry. Now, because of the untimely rains across India, the summer season has been kind of delayed a bit. So we are yet to ascertain the impact of those seasonalities till.
Sure, sir. Thank you. I'll get back in.
Thank you. Our next question is from the line of Bharat Sheth from Quest Investment Advisors Private Limited. Please go ahead.
Hi, thanks for the opportunity, sir. And I hope that in future we'll continue this communication also. Sir, my question is relating to this blue loop technology, where you said that it will completely replacing the flexible packaging. So is it mandatory for all the flexible player, or it will be optional? That is one. And if that is going to happen, what will be the new raw material and what changes that we need to make in our manufacturing processes, and how cost competitive will it be?
Okay, so I think you have asked the three things. So one, we intend to continue these communications ongoing.
Thank you very much.
Yeah. So second one, on the blue loop, maybe I had to again explain. It is not going to replace the flexibles packaging. Basically, currently, if you see, the packaging is, basis the requirement of the product. It can be termed as a multi-layer packaging, or polyolefin-based packaging, or mono-layer packaging. So, just point in case, like multi-layer packaging involves either of the three, so which makes that packaging end product after use unrecyclable or non-recyclable. Like if there is a usage of paper, polythene, or paper and either PP or PE or foil. Whereas polyolefin is basically, it involves PE and PP, which still slightly recyclable but not fully recyclable. Whereas monolayer, which is either the packaging which is made by PE or PP is considered as a best for recycling. So what we are introducing is the laminates or flexibles packaging which is made out of monolayer, which is basically either which is based on PE only or PP only or paper based. And that is a technology we have been developed along with our partners, and that is getting launched. So that's the second one. The third one, whether it is mandatory for everyone, so that you can refer to the regulatory changes what are being happening in India as well as in other part of the world, whereas there is a lot of impetus now on the post-consumer recycling, which is called PCR, then the end of life recycling and so on. So yes, the government is also making certain changes which will definitely regulate the brand owners to adopt to this. And then lastly, it is also because of the brand owners or the large FMCG or consumer packaging good companies are also pledging their themselves in terms of their sustainability goals. So many of our large customers have pledged that by 2025 their majority of their product portfolio will be in the recycled structures. So that's where our new structures will be helpful to our customers.
Yes, sir. And related to that question, will it be more cost competitive or it is slightly? And is there any change in the manufacturing process or raw material part will be there?
Yeah. So while we can't put a number to it, but I will say this way that the product which we are going to launch structure, they are having three discrete, combination. One, protection, which is for any product which is getting packed, whether it's a food or non-food, it requires the shelf life, right? The protection and the shelf life. So the product which we are going to launch, there will be no compromise on that, shelf life, and then the barrier properties which are required. The second one is the recyclability, which will be fully recyclable, and third is affordability. Yes, we are, making sure that it is affordable within the sustainable packaging options available right now, and that's what the purpose is. So while we are working on all the ecosystem to make sure that yes, it is affordable for all the customers and the consumers in the end.
So in connection that, can I take one or two more questions, please? Hello. Hello.
Go ahead.
Okay. You said this will be so now, but a large part of the flexible packaging also has moved to rigid. So is that our potential or market size is reducing?
No, I said vice versa. So in the past, there was a clear movement from moving from rigids to flexibles. So comment, not the opposite.
Okay. On the paper side also, how do we see same thing?
So there are certain customers which are, introducing the paper-based packaging also. At the same time, it depends on products which they are launching, considering the barrier requirements and shelf life requirement.
Thank you. Mr. Bharat Sheth, may we request you to return to the question queue for follow-up questions. Thank you. Our next question is from the line of Nimish Maheshwari from RSPN Ventures. Please go ahead.
Good afternoon, everyone. My first question is related to the tax rate, because there is too much volatility in the taxation in the last 3 to 4 years. So how we can see the tax rate in FY24-25, as well as my second question is related to contingent liability, which increased from 5 crore to 23 crore. So what is the management view on this, and how we look into this?
So let me first answer your questions on the effective tax rate. If you talk about the first quarter, definitely in first quarter we have some favorable rulings in us to have an impact on the effective tax rate. So typically, we have opted for lower tax. So our normal tax rate is at 25.2%. But if there are some developments that help us on certain favorable judgment, that might help. Otherwise, we continue going to have around 25% is a tax rate for us. Contingent liability, whatever probability of those getting materialized into probable cases has already been accounted for in our financials, so we don't see any further, challenge on that front.
Okay. What is the other income comprised of? Why is the last quarter it was negative?
Okay, so we had one of reversals in March 22 quarter. So on comparative basis, it might be looking, otherwise there is no other stuff in that.
Explain this. What is this?
Sorry?
Can you explain?
So in March 2022, we had one of the liability which we have reversed in March 22 because that was not getting materialized. That helped to improve our other income in March 22. Now on a comparative basis, when you look at a March 23, it looked in negative.
Thank you. We move to the next question. Our next question is from the line of Mr. Vipul Shah from Sumangal Investment. Please go ahead.
Hi, sir. Thanks for the opportunity. So my first question is regarding the stability of the management. So now the management, top management has stabilized because there are a lot of management is.
Hello.
Yes, yes, you can see this. We have started this communication on the confidence that we continue this. So Jagdish and myself, Dhananjay, are well entrenched into this company. Jagdish have, I think, now one year, more than a year, and I'm kind of getting reborn 9 months. So yes, we intend to continue, and there is a good stable, key management personnel. Also, we call them a leadership team. Yes, your question I can affirm in yes.
And my second question, sir, can you quantify the drop in the volume? So, in terms of percentage?
Yeah, so
slightly higher than the revenue drop.
No, not in rupee terms. I mean volume terms. I'm talking about.
Yeah. So it's around 15 to 16%.
Thank you. We move to the next question. Our next question is from the line of Dhawan Shah from AlphaStreet Advisors. Please go ahead.
Yeah, thanks for the opportunity, sir. So I have a question on the Blue Loop technology. So, if I look at the parent presentation plus our annual report also, I think we are very much focusing more on the Blue Loop one. So how do you see the next 5 years growth once we launch this Blue Loop technology? So what do you foresee the overall financial performance, how it will be changed just because of this technology, and plus the market size, market share, anything if you can highlight based on the addressable market, plus what will be our competence against the other peers available in the market. If you can share thoughts on this thing.
Yeah. So maybe directly commenting on the market share or what is our the plans in terms of realization will be kind of a speculative, but at the same time I can answer on the confidence level and comparative positions what we have in marketplace. As I articulated earlier, the Blue Loop products which we are launching are going to service the broad spectrum of the requirement, right from food, pharma, non-food, industrial, home care, personal care, and so on. So per se, the addressable market is going to be, what we are serving now, or maybe slightly larger. That's one. Second, it will be, the confidence is coming from a fact that this is a global innovation, and the technology what we have developed is basically is along with our key partners and global experts. So there is a confidence behind the success of the not only technology but also the outcome. So we are pretty confident on introducing these which are going to replace the non-recyclable solutions, and that's where the confidence of coming from.
Thank you. We move to our next question. Our next question is from the line of Jeetu Punjabi from EM Capital Advisors. Please go ahead.
Hi, thanks for this. So one, I really appreciate you all coming out of the call and talking. I think that's a great thing. It'd be great to continue this. Now my question is, in an earlier question you articulated that the 3 key priorities areas that you'd be doing: customer centricity, strategic stuff, and innovation. My question is, if we were to try and look at the tea leaves to try and understand what you're putting to work in terms of people and resources to execute on what you just articulated, can you just give us some color on what resources and people as well as non-people resources you're putting to work in the changed journey going forward?
Yeah, so I think you heard it very well that 3 priorities and 2 enablers. So talent remains one of the enabler, and so we have talent pipeline which is definitely helping us to do this innovative and differentiated introduce these products, and these are now backed with our global reach. we have a R&D labs in Germany. We have the marketing help getting across the globe, and then there is a reach in each market which is having some specialized portfolio reach, and that is where we are kind of also getting certain help on top of what we have a resident knowledge. I call a resident knowledge in Huhtamaki, India, which is basically, in fact, we are the institution which is known for the talent in flexibles packaging industry.
Thank you. Our next question is from the line of Himanshu Shah from Dolat Capital. Please go ahead.
Thank you, sir. Thanks for the opportunity. So just a couple of questions. One, are we looking to send any further plants because we have too many manufacturing sites, and besides Thane, would we be looking for consolidation of our manufacturing footprint, which may bring some more efficiencies and scale of operation?
So we continue to look at our, the customer relevance. I mean, everything what we do is going to revolve around the customer requirement. And if you see in last few years, there has been changes in terms of, GST regime, the transportation efficiencies, road infrastructure, the new customer sites, the new supplier sites, and so on. So we continue to look at the network as a overall, not only the manufacturing sites. So we look at the, what is required from our customers, and we keep on taking the view, and that is what you would have seen in our actions, like what we have taken a view on a Thane unit or Thane plant. So at this moment, I mean, we keep on evaluating the options available in front of us and take a view on ongoing basis.
Thank you. Our next question is from the line of Priyank Chheda from Valum Capital. Please go ahead.
Thanks for the follow-up opportunity. Sir, just a suggestion and more than a feedback, since we've been doing this call after a long time, going ahead, it would be better if we get more clarity about, the lot of other aspects which are unclear yet. The land sale, quantum, how we would use the proceeds, capex plans, I mean, how do we plan to get back the gross margin, sectorial breakup, a lot of other data points which were discussed till now, yet are unclear. And in case, I mean, if you can help me with two more further data points, one is on the utilization levels, where are we right now, and what are the plans to scale up the exports? Thank you.
So, the utilization depends upon the technology and the product structures what we make. So it's remained at what was there in the last, in line with the last quarter utilization. And the next question, probably, what was the follow-up question? I kind of missed it. Sorry.
I mean, how do we plan to scale up the exports?
Exports, yeah. So definitely the exports remain our key market, and we have you would have seen in our annual report as well, we are servicing almost 70 countries by the way of exports, and that remains one of our key levers, and we are using our three-pronged approach. I mean, from a product point of view, one, of course, leveraging our product strength. The second, our global reach in terms of reaching to the market, destination market, I would say. And third, now more and more India as a country also, we are getting more and more impetus to make in India. So all these three levers are definitely going to get used to enhance our exports. Yeah. Anything further?
Yes, Mr. Ramakrishnan from Equity Intelligence Private Limited. Please go ahead.
Hi, sir. Sir, we have been, what percentage of our sales is coming from export, and going forward, what is the what kind of percentage domestic and these exports we will have, and whether the export is also equally profitable to as well as the domestic market.
So we do approximately 30% of our revenues comes from exports, and we continue to look forward to enhance that. At the same time, we want to also grow in domestic market also. So the percentage really would not be really a matter. Whereas in both the market we want to grow. And answering your question on the exports profitability, I think it is accretive to our business.
Okay.
Thank you, sir. Our next question is from the line of Vaibhav Bhajatia from Honesty and Integrity Investment. Please go ahead.
Yeah. Hi, sir. The opportunity. I hope I'm audible.
Yes.
Yeah. So for the land that we have put up for sale, what is the size of the total land? Is it like 12 acres, 14 acres? Are these?
I mean, that is something which probably it's over 8 acres or 8 to 9, more than that. Yeah.
I mean, approximately that's what can take.
Mr. Vaibhav, could you repeat that, please?
Yeah. So is it like around 10 acres? Is like what is the exact size it can provide? Like you said 8, but is it like 10, 12, 14? How many acres are there?
No, I think we'll let you know once some due diligence is going on and survey is going on. So definitely we'll come back at the right time on that.
Thank you. Our next question is from the line of Pulkit Singhal from Dalmus Capital Management. Please go ahead.
Thank you for the opportunity. So for the domestic market, within your current category, certain questions. Number one, how many competitors typically participate in the RFQs that you are participating in? And second is that, do you typically have to kind of match the pricing, or are you able to get some kind of pricing premium for the product? That is my first question.
Yeah. So in RFQs, I mean, it depends upon the structures and the products and the lots. But I would say there are team competitions. I mean, if you have to ask numbers, probably it kind of can be ranged from typically 10 to 12 to almost 20. So that's the intensity of a competition. And the whether to match the prices or not, it depends upon the company to company, or I mean customer to customer. But of course, as the RFQ nature itself is that the decision lies with participants where they want to quote and where they want to hold on to. And the last one comment what you asked for, the premium. This is where I already mentioned that the pace of commoditization in the flexibles packaging has accelerated over last few years. So and that is where the new product introduction is going to play a very important role to again demand that premium.
Understood. The second question was on the new product introduction itself. And typically such changes, when a company is going to relook, they will consider all kinds of products as well, I presume, related to paper packaging as well. So wherever you're competing with paper, where they are able to match the barriers, properties, etc. requirements, what is the kind of pricing difference that is there in the single use versus paper? I mean, is it a premium or discount?
So from that point of view, we see the plastic flexibles packaging, which is non-paper. Let's say that is one of the most competitive structures available. Whereas wherever there is a paper involved, it would be a premium structures. So as compared to the current flexible structures.
Thank you. Due to time constraint, that was our last question for the question and answer session. I would now like to hand the conference over to the management for closing comments.
Yeah. Okay. Yeah. Thank you, Hitesh. So, thank you everyone, attending the call and asking the questions, which are also helpful for us to reflect and take certain inputs, and we continue to engage with the community going forward. So, thanks everyone. Thank you, Jagdish, for joining me today to attend this call. So, thank you, everyone.
Thank you. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.